Hello everyone, good evening to all. Just confirm me once in the chat box, sir, my voice is audible. Okay, sir, thank you. Sorry for the break of 2 to 3 days. Actually, there were certain technical issue. So we were not able to conduct the live sessions. But from today onwards, we have regular classes and we'll also try to cover these 2 days break in Saturday and Sunday. Okay, we'll try to cover the same. So, sir, today we all are going to start a very new topic, a very special and a very important topic at all. Okay. When we have started this GST comprehensive course 9 days back, you can say 9 sessions back. Okay. So at that time, we have started our discussion from the concepts of GST, why there is requirement of GST, what do you mean by GST, what type of ledgers are there in GST, what do you mean by the output tax, what do you mean by the input tax, what do you mean by output tax credit, input tax credit. We have done the concepts when a particular activity or transaction becomes supply, how the GST will be applicable on that, how we can decide that this particular supply is a supply of goods or supply of services, or this is a mixed supply or composite supply. Then we have done what will be the time in which we have to introduce that particular supply in our GSTR 1 and 3 be written, and also we have done that on which value we have to show the same in our return. Now, sir, question is that when we are supplying something, at the same time for making the particular supply, there is requirement to buy something, because unless and until I will not buy something, how I can sell something into the market? So there is requirement of purchase. Okay. So on my outward supply, I am paying the output taxes. Am I right? When I am making the sales, suppose I have sold a course 5,000 rupees, GST 18%. Okay. So at that time, I am paying GST on that. Suppose 900 rupees, I am paying GST on the 5,000 rupees because I am supplier and I am paying the GST. Okay. For providing that particular supply, there is requirement to buy something from the market. Okay. And when I bought that particular goods from the market, at the same time, my supplier has also charged the GST. Okay. I am one person. I am supplying something into the market. So there is requirement that I have bought that particular thing from the market itself. Okay. So when I bought the goods from the market, at that time, my supplier has already paid the GST to the government. So I will be eligible to claim the tax which I had already paid to that particular buyer. Just for an example with reasoning. Okay. Sir, I know this example is very basic, but just once for me, try to listen this example. Okay. Suppose I am selling a particular goods, 1 lakh rupees at the rate of 18%. You can say 18,000 rupees is the GST figure I am paying to the government. Okay. That particular good I have bought from the market for 90,000 rupees. Okay. And I have already paid GST on that 90,000 rupees. Suppose GST figure is 16,000 rupees. Now, sir, when I am paying the taxes to the government on my outward supply, that is 1 lakh rupees at the rate of 18%, that is 18,000 rupees. From that 18,000, 16,000, I have already paid to my supplier. So I just need to pay only 2,000 rupees. So the benefit which I am claiming, of the tax which I had already paid to the supplier, that is called as input tax credit. That is called as input tax credit. Because this is a credit for me, I can utilize this particular thing for outward supply, for payment of output tax. Now, sir, I am always saying that this input tax credit is the heart of GST. This input tax credit is the heart of GST, because if you will check, maximum number of notices in GST nowadays is based on input tax credit only. There is a mismatch in 3B and 2B. There is a mismatch on account of fake invoicing, on account of paper transaction, on account of movement of goods without invoicing. So maximum reasons, if you will check, then you will find that the maximum reasons are on account of this input tax credit only. And this is really very crucial. Now we'll try to understand that why this is very crucial. Then after we'll discuss the terminology of law as well. Sir, for this input tax credit, I require your 100% attention on the screen because this is quite important. Okay. And those who will watch the recordings, this is my suggestion to you that please take care of this subject in a very well manner. Okay. Now, sir, input tax credit. By supply. Okay. Now, on my outward supply, I am paying the output tax. Am I right? On my outward supply, I am paying the output tax. On my outward supply, I am paying the output tax, and we are saying that whatever will goods, Sachin, you have bought from the market for making the outward supply, you can avail the benefit in the form of ITC. Sir, just try to understand, whenever you found a word benefit, in that case, what we plan, okay, our government is giving us a benefit of 10 rupees. Why not we can claim a benefit of 12 rupees, 15 rupees, 20 rupees? Whenever there will be a word that is benefit, the chances of misuse got enhanced. There may be chances that someone is making the outward supply and someone wants to take the benefit of input tax credit. Hence, the person may go for the fake invoicing. That means that person may buy the invoices from certain suppliers without actual movement of goods. Okay. So in that case, that input tax credit will be treated as fake ITC. These chances are also there. Hence, this input tax credit is very crucial because you are taking the benefits. So if you are taking the benefits, in that case, your benefit should be very much perfect and the benefit should be very much genuine. Hence, government has imposed multiple conditions to check the genuineness of the input tax credit. Okay. जैसे हमारा gold होता है ना, gold is pure form. So this input tax credit is also a gold, you can say. Okay. So first we'll try to understand the basics of input tax credit, the advanced terms of input tax credit, the various terminology of input tax credit, and then after we'll read the sections from the book and we'll also discuss the memory technique. Okay. Now, for claiming the input tax credit, government has introduced certain important rules. First, when I am saying that I am going to utilize that input tax credit, that benefit, for paying the output tax to the government on my supply. Okay. So I am just going to utilize the same. I am just going to utilize that benefit. Okay. So government is saying that if you want to utilize the benefit of input tax credit, in that case, first point is that purchase for which you are availing the benefit, that purchase should be in the course or furtherance of business. Suppose you have bought air conditioner for your home and you are planning to claim the input tax credit in your business. Is that correct? No, because government is saying that Mr. Sachin, you will be eligible to claim the input tax credit only in case when the inward supply is used in the course or furtherance of business. If you will use it for the in the course or furtherance of business, then you can claim the input tax credit. This is the first point. Okay. Now, sir, for this input tax credit, I am just going to repeat certain concepts again and again because I want that this concept should be there in your brain. Okay. So, first condition, first point, in the course or furtherance of business. Now, लोगों ने क्या किया? Taxpayer started certain plannings that we can use this particular product in our business. So we are eligible to claim the input tax credit, no any other condition. So at that point of time, government is in view that if we are not imposing certain further condition, in that case there may be issue regarding the input tax credit. So government has made certain conditions, and government said that Mr. Sachin, if you want to claim the input tax credit, then you have to follow certain condition. First condition, that is, you should have the invoice or debit note. So whenever we are claiming the input tax credit, there is a must requirement, that is invoice or debit note. You cannot say that this invoice is not available with us, the debit note is not available with us. Departmental authority may raise the concern. In case of departmental audit, in case of business audit, the authorities are asking for the sample invoices as well from you. The purpose is also this: they want to check that the physical invoices are available with you or not. Okay, you have to retain the documentation for a limited amount of time. That also we'll discuss at the time of our discussion on section 36. Second, the input tax credit which you are claiming on the basis of invoices or debit note in your hand, that invoices should be reflected in your GSTR 2B. Without GSTR 2B, you cannot claim the input tax credit. So this is also a must requirement. Whenever you are filing your GSTR 3B return, you just need to check that input tax credit which you are claiming in your GSTR 3B return, that should be reconciled with your GSTR 2B return. ऐसा नहीं है, the ITC reflected in GSTR 2B is 5 lakh rupees. In your books of accounts, you are claiming the ITC of 7 lakh rupees. Not allowed. Third condition, sir, without receipt of goods, can I claim the input tax credit? No, not at all. So third condition, receipt of goods. Without receipt of goods, you cannot claim input tax credit. Sir, if the ITC is reflected in your GSTR 2A and not reflected in GSTR 2B, in that case you will not be eligible to claim the input tax credit. The reason being, there may be chances your GSTR 2B is going to lock on 11th of subsequent month or 13th of subsequent month. There may be chances that your supplier has filed the return on 12th. So in that case, the ITC will not be reflected in your GSTR 2B, but the same has been reflected in GSTR 2A. So you just need to keep this point in your mind, that the input tax credit you have to claim in subsequent month. Sir, import of service is the exception of section number 7. आपको पता रहेगा, in case of our section number 7, we have done two mandatory conditions. One is for a consideration, another is in the course or furtherance of business. But in case of import of service, if no consideration, in that case also supply, and if not in the course or furtherance of business, in that case also it will be treated as supply, because on import government is taking the tax under reverse charge mechanism. Yes, in case of import of goods, you can pay the amount and you can claim the input tax credit, not an issue. Sir, time of supply is relevant from the perspective of outward supply. Okay, so first condition, in the course or furtherance of business. Second condition, there is requirement of invoice or debit note. The same should be reflected in GSTR 2B and receipt of goods. Now, I just want to ask one question from all of you, and I require your 100% participation in the chat box. Okay, I require answer from you. Okay, sir, I am from Jodhpur, Rajasthan. Okay. And I bought certain goods from Karnataka. Suppose I bought the goods on 30th of April 2025. Okay. My supplier has already provided me the invoice. Okay. And the same is reflected in GSTR 2B as well, 30th April ki date mein. If you will check, then in your GSTR 2B, you will find that purchase related entry. Let me know one thing, that sir, I am eligible to claim the input tax credit, because invoice is of 30th April. I have the invoice and the same is reflected in GSTR 2B, and my supplier has already filed the return and paid the taxes to the government. So sir, just let me know that I will be eligible to claim the input tax credit or not. 100% answers are correct. Great. Sir, many times what will happen? Our client is sending the GSTR 3B related data to us. We are putting it on GSTR 3B and filing the return. We just need to go through once the GSTR 2B invoices as well and the purchase register of our client as well. And if we found any entry on the last day of month or second last day of month, in that case, we have to ensure that Mr. Have you received these specific goods? Because from Karnataka and I am in Jodhpur, Rajasthan, it is next to impossible to receive the goods on the same day. In that case, although the ITC is reflected in my GSTR 2B, I have the invoice. My counterparty has filed the return and paid the taxes to the government. I will not be eligible to claim the input tax credit because I have not received the goods. On half yearly basis, on quarterly basis, you should check once the purchase register of your client and try to identify the month end entries. Otherwise, what will happen? Otherwise, what will happen? If you have claimed the input tax credit, okay, in future when the departmental authority will come up with the audit, they will check the purchase register, they will identify the month end entries, and they will ask you regarding the transportation documentation. So transportation documentation presents that you have received the goods on 2nd of May or 3rd of May. Departmental authority will say that when you have received the goods on 2nd or 3rd of May, how you can claim the input tax credit in April month? So at that time, you have to reverse the input tax credit. And if you will say that, sir, as the input is reflected in our May month, so now we can claim the input tax credit? No, because the timeline of section 16 subsection 4 has already been lapsed to claim the input tax credit. That is what is the point we have to keep in our mind. Although we'll discuss the section 16 subsection 4 later on. Okay. So the condition in the course or furtherance of business, invoice, debit note, GSTR 2B, receipt of goods, and sir, your counterparty, that means your supplier has filed the return and paid the taxes to the government. These are the mandatory conditions that should be fulfilled for claiming the input tax credit. Agar ye fulfill nahi hoti hai, then you will not be eligible to claim the input tax credit. That is what is the point we have to keep in our mind. Next, sir, suppose I have placed the order for 50,000 unit of a specific product. Okay. And I am receiving these products in lots. Okay. Suppose in April month, I have received 1,000 units. Suppose 10,000 units. In the May month, I have received 20,000 units. In June month, I have received 20,000 units. Okay. In that case, my question is that whether I will be eligible to claim the input tax credit on partial basis, that is 10,000 when I have received, I will be eligible to claim the input tax credit. 20,000 when I will receive, I have to claim the input tax credit, and 20,000 in June month. No, no sir, no proportionate basis is available. That is what is the point we need to keep in our mind. Many times what will happen? In the books of accounts, if you will check, client has received the goods in lots, one lot, second lot, third lot. In that case, you have to check that your ITC will be allowed at the time of your last lot only. Okay. Yes, if you have prescribed each lot as a separate invoice, in that case you can claim the input tax credit invoice wise. Thus many times what will happen, your goods is received in certain lots. Okay, at that time you have to keep this point in your mind that your ITC will be allowed at the time of last lot only. ऐसा नहीं है कि you can claim the input tax credit on partial basis. Okay, this is lot wise. So certain condition we have done, that is in the course or furtherance of business, the same should be reflected in GSTR to be invoice should be there, and receipt of goods, and the counterparty has filed the return and paid the taxes. Okay. Now the most important thing, sir, suppose I am a buyer, okay, and I bought certain goods from the supplier. I am a buyer and I have bought certain goods from the supplier. At that time, the point and concern is that suppose I have to make the payment to my supplier, okay, and if I am not making the payment to my supplier within 180 days, in that case government is saying that you will not be eligible to claim the input tax credit from 181st day. Sir, what is the reason of this specific provision? Because if government not come with this particular type of provision, that if you have bought the goods from a supplier and you are not making the payment to the supplier within 180 days, in that case your ITC will be reversed. Why this provision is required? Reason being, sir, reason being, if government has not implemented this type of reason or this type of condition, in that case what will happen, there may be chances of certain paper transactions. Okay, there will be a very lower currency flow, there will be very lower liquidity in the market, because payment cash or bank, when this amount will move, in that case the liquidity will be generated, so there will be an issue with liquidity. There may be chances of certain fake transactions because no requirement of payment, so just generate invoice for once, then payment whenever there will be adjustment, we'll check and we'll close the account. But government has prescribed a specific timeline that within 180 days you have to make the payment of taxes, so that it can reduce the chances of fake invoicing, paper transaction. It will generate the liquidity in the market, it will generate the cash crunch in the market as well. That is what is the point. Yes, sir. If there will be a buying and selling, both the transaction is there. In that case, you can pass the journal entries regarding the same. Okay, that will be treated as your exchange, you can say. In case of EMI basis, your ITC will be allowed on partial basis only. Okay, you will not be eligible to claim the 100% input tax credit. You have to claim the input tax credit on partial basis. Nimesh sir, that GSTR 3B ITC removal, that you just need to check the IMS dashboard, invoice management dashboard. Okay, in invoice management dashboard, you have the option to accept, to reject, to keep it pending. So in that case, you may select or show that invoice as keep it pending, and in subsequent month, you may select this particular invoice as an accepted invoice. Sir, if the deduction is due to certain non-compliances, and in that case also you have to reduce the input tax credit once. When your compliance is done, at that time you can reclaim the input tax credit. Sir, capital goods will discuss. I think many number of participants has certain issues. Many number of participants has certain issues regarding the capital goods. So we'll discuss in a detailed way. What do you mean by 60 months? What do you mean by 5% per quarter or part of the quarter? How the reversal is going on? That we'll discuss. Sir, Gurmeet sir, everyone is facing this specific type of issue, that how we can check the things of the supplier perspective. Okay, so now the facility is available. Yes, you can check the GST and you can check the particular person has filed the GST or 3B return or one or not. But yes, this is quite difficult to handle the own compliances and also to check the compliances of the supplier. This is quite difficult. Okay, for that purpose, there is also a High Court decision is available. In that case, the Honorable Punjab High Court has given a very specific decision in which they said that if there will be a non-compliances at the end of supplier, then government should first raise the concern and ask for the taxation and applicability of law from the supplier. Then after you can come to the buyer if supplier is not available. Yes, Gagan sir, there may be chances that supplier may file your GST or 3B return, but you just need to check the things. Okay. Yes, sir, in our case study book, as you all have bought the books, if you will check the case study book, in that case, the case is given. Punjab and Haryana High Court, the same is given and will also cover. No, sir, Nagamani sir, if he has merely filed the GST or 3B return nil, how you can ensure at the end government, the purpose of government is to claim the input tax credit, or the purpose of government is to earn the revenue. Okay. Yes, ITC appear in GSTR 2B, but merely appearance in GSTR 2B is not sufficient. Hence, in section number 16, subsection 2, they have given the condition that the person has filed the return and paid the taxes to the government. Both conditions should be verified. That person has filed the GSTR 3B return but not paid the taxes to the government, not allowed. Your ITC will not be allowed. So you just need to maintain the transaction with a genuine person and regular business deals as well. Books related, those who have placed the order late, they will get the books very soon. Actually, monsoon is going on, so we'll receive the books very soon. Just wait for some more days, 1 to 2 to 3 days more. Rasmi ma'am, they are talking from a very specific perspective. When a person has filed the GSTR 1 return with invoices while filing the GSTR 3B return filed as nil. Okay, system is not disallow you. Okay, but now as government is implementing certain automated population of figures, okay, now they have also putting the mandatory condition of the unregistered sales from GSTR 1 to GSTR 3B, which will be auto populated and cannot be in an edited form. So these type of things may confirm in future regarding the payment of taxes. Okay. Yes, sir. If the supplier has paid the taxes to the government, but you have not made the payment to the supplier within 180 days, ITC will not be allowed, because this is also a condition. Okay. Now I'm just covering the basic points of this input tax credit. Then after we'll just directly link it with this section. Okay. Next, one common point from capital goods perspective. Regarding ITC, we'll discuss later on. But from capital goods perspective, suppose I have bought one mobile phone. Okay. The price is suppose 1 lakh rupees. GST at the rate of 18%. So the total price of phone is 1,18,000 rupees. In that case, we are claiming the input tax credit of 18,000 rupees in our books of accounts. And in income tax, as this is a capital assets, so depreciation is also required. So now the point is that whether depreciation is allowed on 1 lakh rupees or 1,18,000 rupees. Everyone is very much correct that if you are going to claim the input tax credit, then 1 lakh rupees pay you can claim the input tax credit. What is the reason why government is saying that you cannot claim the depreciation on 1,18,000 rupees? Anyone can please give the reference of reason? Gagan sir, rule 42, 43 is completely different. We'll discuss that. Yes, exactly. Double benefit, exactly. If the government allowed for the depreciation on the invoice value, in that case you are taking the benefit of the input tax credit, and on the same figure you are availing the benefits of the depreciation as well. So there may be chances of dual benefits, hence government has given this specific condition. Also, one more important provision, sir. Point is that suppose for financial year 2024-25, I have filed my all the returns, declared my output supply, claim my input tax credit. But there is one issue. While filing the return of financial year 2024-25, I forgot to claim certain input tax credit. I forgot to claim certain input tax credit. In that case, the question is that whether I will be eligible to claim the input tax credit in subsequent month. Yes, government is saying because you are a human being, so there may be chances of certain issues so that you can forget to claim the input tax credit. So we may allow you to claim the input tax credit related to financial year 2024-25 during the subsequent financial year. But Mr. Sachin, we have to decide a time limit, because if we'll not put any restriction on the time limit, in that case what will happen? After 2 years, after 3 years, you will come and say that that input tax credit I have not claimed, so can I claim it right now? Hence government has imposed a specific condition that related to a particular financial year, if you forgot to claim any input tax credit, then you can claim that input tax credit by 30th November of subsequent month. Or annual return filing date, whichever is earlier, that will be the last date till you can claim the input tax credit related to a financial year. Okay, that means for financial year 2024-25, if you have forgot to claim any input tax credit, in that case the due date to claim the input tax credit, the last date to claim the input tax credit, that is 30th November 2025, or annual return filing date, whichever is earlier. Suppose you have filed the annual return on 15th of November. In that case, 15th of November will be treated as your last date to claim the input tax credit for financial year 2024-25. And yes, as 30th November, we have no any due date for filing the GSTR 3B return. So we know October month return we are filing by 20th of November. So while filing the October month return, you will be eligible to claim the input tax credit related to the previous financial year. Okay, because 30th November is no any due date, so we have a due date is 20th November. So when you will file the October month return, if you are filing it on 25th of November, 27th of November, 30th of November, so this will be treated as your last date to claim the input tax credit. No sir, you will not be eligible to revise any annual return. Once you have filed the annual return, it will be fixed and final. If you will file it on 21st of November, in that case, yes, sir, while filing the October month return, if you are supposed to file your October 2025 month return by 30th November, it is completely okay. You can claim. But suppose if you are filing your October month GSTR 3B return on 1st of December, in that case, if you are claiming any input tax credit, that will not be allowed. Because 30th November or annual return, whichever is earlier, that is the last date. Yes, sir. Capital goods should also be capitalized in the books of accounts, but obvious. Yes, in case you directly visited the place of that particular person and the goods is with you and you are carry that particular goods, yes, you can claim the input tax credit. Now, condition number 1, in the course or furtherance of business. Second, ITC. 4, you have the invoices or debit note. The same is reflected in your GSTR 2B statement. You have received the goods. Supplier has paid the taxes, filed the return. If you are receiving the goods in lots, in such a scenario, the same should be received in. The same should be claimed on account of your last lot. Okay. You have to make the payment to your supplier within 180 days. If you are not making the payment, in that case, you have to reverse the input tax credit. In case of capital goods, you are eligible to claim the input tax credit, and depreciation should be claimed on taxable value only. And section 16 subsection 4 imposes the restrictions to claim the input tax credit. The timeline to claim the input tax credit 30th November or annual return, whichever is earlier, that will be treated as your last date. If you have claimed any excess input tax credit during previous financial year, you can reverse it during the current financial year definitely. Now, sir, ये जो हमने discussion किया section 16, and through this particular section, I think we all are agree that, sir, this input tax credit is very crucial. That first I have to check in the course or furtherance of business. That after I have to check multiple condition. Then after I have to check that I have to make the payment to the supplier within 180 days. Then after I have to check that I have to claim the input tax credit on and depreciation should be claimed on taxable value only. Then also I have to check that related to a particular financial year, the ITC can be claimed till 30th November only. So multiple conditions, multiple restrictions are there, and then only you will be eligible to claim the input tax credit. That means your ITC should be pure like a gold, because gold is very pure. And the memory technique for section number 16, this is my section number 16. The memory technique for section number 16 is in Hindi. Sir, I know maximum number of participants are from South, but for this particular section, you have to memorize the memory technique in Hindi only. Hindi mein there is one slogan that, sir, 16 aane such. If we want to measure a purity of a specific thing, then we are measuring it with 16 aane such. So section number 16, 16 को हिंदी में बोलते हैं 16. So we can say for this section number 16, the memory technique is 16 आने such ITC मिलेगी फटाफट. 16 आने such ITC मिलेगी फटाफट. So whenever you will look on number 16, the first thing which should be there in your brain, that is 16 आने such ITC मिलेगी फटाफट. So this section is on account of input tax credit. No, sir, revision of annual return is not at all possible. So 16 आने such ITC मिलेगी फटाफट. So this section is on account of your input tax credit. Just check it from the book as well. The conditions for taking the input tax credit: you should have your tax invoices, invoice, debit note, that should be there. Second, receipt of goods and services is also required. Tax leviable has been actually paid to the government, and return has already been filed and to be, and goods received in lots. In that case, ITC will be allowed at the time of last lot. Payment to the supplier within 180 days is required. If you have not made the payment, in that case reversal is required on account of depreciation, and timeline to claim the input tax credit, that is 30th November of subsequent financial year. Government has inserted the section number 16 subsection 5, section number 16 subsection 6, that will discuss later on with the insights of the GST council meeting. Okay, so that it will be very easy for all of us to gain the concept. Sir, just let me know once the concept to claim the input tax credit, various conditions, last lot, payment to creditors, ITC in case of capital goods, and the maximum timeline for the claiming of input tax credit. Each and everything is okay for everyone. Just let me know once in the chat box. Sir, are you enjoying the session? Or this session is boring? Whatever you want to say, you can put it in the chat box. Thank you, sir. Sir, ITC on capital goods will done in a very detailed way with rule number 42, 43. We'll discuss in a very detailed way. Big machinery will discuss. Okay, sir. Thank you. So we'll start our discussion on the next concept. Sir, 180 days should be counted from your invoice date. From invoice date, 180 days you have to make the payment. Processing charges on loan, the ITC allowed. Reason being, these processing charges on account of the service provided by the bank. So ITC allowed. Sir, I think many of the participants are from ICTPI. So those who are going for the convocation, are you coming to Ballari on 15th and 16th? 16th and 17th. ITC on hotel stay and flight tickets, that will discuss at the time of our discussion on place of supply. Okay, I am also coming to that event. Yes, definitely we'll discuss multiple things. So those who are not coming, they should also plan to join the convocation ceremony. Next, the concept of creating spatial circumstances. Yes, sir, definitely. I will be there for 2 days. So let's meet and greet each other. Nothing, sir. Just your blessings are more than sufficient. Create spatial circumstances. So let's discuss one provision in our today's session. Sir, when we are applying for the GST registration, okay, suppose 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 I am a very small taxpayer, okay, not registered under GST. On one day, a great day of my life, okay, you can say, and my turnover crosses the specific limit to take the GST registration, okay. So I'm applying for the GST registration. Suppose on 20th of May 2025, my turnover crosses the specific limit to take the GST registration. And sir, this concept we should learn in a very practical way, because this is very interesting as well as very important. Okay. So on 20th of May 2025, my turnover crosses the limit. There may be chances that our client is come to our office and said that, sir, my turnover crosses the limit. What will be the next step? So we should ready. On 20th of May, my turnover crosses the specific limit to take the GST registration. Okay. So now turnover crosses the limit on 20th of May 2025. Before that 20th of May 2025, I was dealing, okay, I was making the sales, hence my turnover crosses the limit as on 20th of May. So but obvious, before 20th May 2025, I have bought certain goods, and the same goods I was selling in the market. So when I already bought that particular goods and I am supplying the same into the market, but at that time I have not claimed the input tax credit, the tax charged by my supplier, because I was not registered under GST. So as on 20th of May 2025, whatever will be the input which is available with me, that is input goods which is held by me, the input goods which is held by me, that is available on 20th of May 2025, and now I am applying for GST registration and I have to pay GST on my outward supply. Okay, so when I have to pay the output tax on my outward supply, on my inward supply I have not claimed the input tax credit because I was not registered, but now I am registered. So whatever will be the input goods available with me, I should claim the input tax credit because this is my right. I am paying the output tax to the government. Sir, in the complete GST, if you want to learn, one logic only regarding the input tax credit is that if you are paying the output tax, you will be eligible to claim the input tax. If you are not paying the output tax, you will not be eligible to claim the input tax. Okay. So in that case, as I am paying the output tax on my outward supply from now onwards, so what about the input goods which is available with me, which I have bought prior to taking the GST registration? So government has come up with a very special provision that Mr. Sachin, as you are liable on 20th of May 2025, if you will apply for GST registration within 30 days from your date of liability. Suppose I have applied for GST registration on 10th of June, that is within 30 days. In that case, as on date of liability, that is as on 20th of May 2025, whatever will be the input goods available with you, you can claim the input tax credit. But sir, suppose if I have not applied for the GST registration within 30 days, I am applying after 30 days. Suppose I am applying on 25th of June, after 30 days. In that case, what will happen with input tax credit? Government is saying if you will apply after 30 days, in that case, you will be eligible to claim the input tax credit of the input goods which is available with you as on the date of grant of registration. Suppose I have applied for GST registration on 25th of June. Government has allotted me the GST registration as on 5th of July. So in that case, as on 5th of July 2025, whatever will be the input goods available with me, I will be eligible to claim the input tax credit. But if I am applying within 30 days, in that case, as on the date of liability, whatever will be the input goods available with me, I can claim the input tax credit. Why is this differentiation? Because government is saying if you are applying after 30 days, that means during this period you may made certain sales without GST, not paid output. So why you will be eligible to claim the input tax credit? But if you are applying within 30 days, in that case, as on date of liability, whatever will be the input goods will pay you the input tax credit, will give you the benefits of input tax credit. This is also a very important concept regarding the new registration. Okay. So in our today's session, we have done with the input tax credit, the conditions to claim the input tax credit, how we can reverse the input tax credit in case of not payment to the supplier within 180 days, what is the importance of capital goods and depreciation, and what will be the last date to claim the input tax credit related to a particular financial year, and the basic concepts of input tax credit in case of new GST registration. In our next session, that is tomorrow sharp at 7 p.m, we'll discuss about a very interesting concept, that what will be the implication of input tax credit in case of exempted to taxable product, composition to regular. We'll also discuss about the blocked credit in case of section 16 subsection 5. We'll also discuss about the specific thing that I bought certain goods which I am using for my personal purpose, for my business purpose as well. Then what will happen? We'll also discuss if we bought certain goods for taxable or exempted goods, then what will happen with regards to your input tax credit. And we'll also discuss, sir, about the various blocked credit, and we'll also discuss about the specific scheme which is available for banking and NBFCs in our next session 7 to 8 p.m. Sir, special circumstances comes under section number 18. We'll discuss is now I have just shared the concept. Okay. We'll discuss the complete section. We'll discuss the memory technique. Sir, in case of ITC or new registrations, if you are applying within 30 days, suppose my turnover crosses the limit on 20th, and if I will apply within 30 days, in that case, on 20th, whatever will be the goods which is available in my inventory, my supplier has already charged GST on that. So on that inventory, I can claim the input tax credit. But if I am applying after 30 days, in that case, as on grant of registration, जिस दिन GSTN issue करता है, welcome to the GSTN family. On that date, whatever will be the input goods available with you, you will be eligible to claim the ITC. Yes, sir, you can claim the input tax credit if you are visiting the place of supplier and you are buying the goods. Sir, special circumstances very simple in case of new registration only. Okay. Although we'll discuss in our next session with reference to sections as well. Sir, after 20 lakh, the supply which you are making after that 20 lakh, on which the GST will be applicable. Yes, recorded video will also be available and the same will be provided to you by tomorrow morning. Sir, in case of capital goods, ITC is not allowed. Sir, voluntary registration, just give me one day. Tomorrow we'll discuss after this specific concept, the voluntary registration only. So thank you once again, each one of you. Sir, how ITC will be available? ITC will also be available from that day only. Sir, the supply which you have already made before taking the GST registration, and on that particular supply, the input goods which was with you, you have not claimed the ITC. Okay, so when you have not claimed the ITC, hence you have not paid the output tax. Now you are paying the output tax on your output supply. So whatever will be the input goods available with you in your inventory, you will be eligible to claim the input tax credit. Sir, if you have liability reported in GSTR 3B more than reported in GSTR 1, and tax you have paid in August 2024. Sir, I'm not getting your point. Can you please WhatsApp this particular query as what think you, in which month you have filed the return, in which month you have made the necessary adjustment? If it is possible for you, then just share the tabular form on WhatsApp, okay, so that we can discuss. Yes, capital goods ITC is allowed. There is no restrictions in case of capital goods for the ITC. If you are using it purely in the course or furtherance of business, then not at all requirement of any reversal. Muralidharan sir, you will receive the book very soon. Okay, there is rainy season is going on, so there are certain delay in the book delivery. But yes, you will receive in next 1 to 2 days, I think. So thank you once again for joining, for listening with us. Tomorrow evening, sharp at 7 p.m. we all will meet and discuss the next concepts of GST. Thank you once again. Bye bye. Good night. Take care.